Hello, everybody. It's Dr. Joe in the house, and hope you're having a wonderful week, and hope you're having a wonderful day. So today we got another action-packed session on Wealth Wednesday, and the topic for today is going to be from single family to multi-unit, scaling your real estate portfolio. So from single family to multi-family, we're going to talk about that and also how to scale your real estate portfolio. That's the subject of the day. And the reason why we're having that topic is because a lot of people, who've done single families are really considering should they upgrade or, scale up to multi-family, whether it be duplexes, triplexes, 4 unit buildings, 10 unit, 12, multi-family as opposed to single family. A lot of people want to do that. A lot of people have a lot of questions about that and the pros and cons, why, the benefits, the trials and tribulations of doing that. And as a result, I thought, it'd be good to talk about that. And that's what we're going to do today. Disclosure. I primarily do single families, and it's the niche I know. I know it very, very well. I think I've been doing it very, very well successfully after a lot of ups and downs. But I think I figured out the single family market, especially as it pertains to renting out to Section 8. And but I haven't really gone to, apart from a couple of houses which have a separate basement units, which I rent out separately. I haven't really gone into multi-family, triplexes, quadplexes, and things like that. Although I've thought about it, I just haven't done that. But just because I haven't done it doesn't mean that you shouldn't do it. So that's the reason why I want to cover this topic today. And as you can see from the ticker tape on the bottom of this screen, we will have a session, a live event, December the 16th at one of my students' properties in Washington, D.C. And it's going to be a really good session. I think you heard the story. One of them, he bought a house up in Washington. It was a 4-bedroom, 2-bathroom house. And when he bought it, and he's in the process right now of transforming it into a 6-bedroom, 4-bath house, so from a 4-2 to a 6-4. And it's in Washington, D.C., which is an expensive market. And so how in the world can you get a house which you're paying over $500,000 for to cash flow? And that's what we're going to learn. That's what you'll learn because he's doing it. And he's a new investor, just like you. But he's decided to pull the trigger and take action. And so you'll get an opportunity to walk through one of the houses, see it in real time. And we're going to do an education and learning event. We're going to go drill down onto the birth strategy, the renovations. How do you actually do this? How do you find a contractor? How do you develop a scope of work? How do you navigate and manage the rehab process? What is the process? What are the steps associated with that? What's the exit strategy? How do you manage change orders, problems, headaches, frustrations? We're going to go over that because it's not always been a easy peasy, as they say. We've had some trials and tribulations already. So we're going to talk about that. It's going to be, I'm not going to sugarcoat anything. It's not easy, but it's not difficult, but you definitely can do it. And we'll talk about the good, the bad, the ugly during the session. And as always, me, I will, me, I mean, I'm going to go deep. So I'll go as deep as you want me to go. And also we're going to have a networking. So you're going to meet with other like-minded people, just like yourself, who understand. And, and so we can sort of break bread also. So there's going to be food, catered food is going to be there. Nice food, just like last time. It's going to be a great event. So please sign up. You can sign up go to my website, joeasimo.com, www.joeasimo.com, and you can sign up there. And it's going to be Saturday, December the 16th, next Saturday, not this Saturday, the Saturday afterwards, between 11 a.m. and 1 p.m. So you can sign up for that event. And so on. So anyway, without any further ado, let's get down to the topic at hand, which is from single family to multi-family or multi-unit. and how to scale your real estate portfolio. So, why is scaling important in real estate? That's the question. Why is it? I mean, you may be happy with just having one house. You may be happy with a couple, but in reality, if you want financial freedom, if you want to be able to have a good income stream, you're going to need more than just one or two. You're going to need to scale your business. Okay. You're going to need to increase your income. You're going to need to limit your exposure, your risk. Okay. And also, you want to increase your wealth, which is your assets minus your liability. You can do that with by increasing the number of properties that you have. And so as you expand your portfolio, a lot of people say, well, okay, maybe I can go from single families to multifamily because I can unlock new opportunities, new revenue streams, and so on. This is the potential. But like all things, the grass is always green on the other side until you get there. And when you get there, you realize it's not always cracked up to be. It's still a lot of hard work. It's doable, but it's not always as easy as what people say it is, especially these gurus who pitching these products and things like that. It's hard work. Okay, well, you know that, we know that, and therefore, I don't think I need to dwell on that. It requires there are challenges that you're going to face, and but the bottom line is that you need an understanding of financial strategy. How are you going to get the money to do this? The market dynamics, where you are. Is there a demand for the type of properties that you're going to bring to market? And obviously, if you scale, you're going to have more tenants. So property management becomes more of a challenge and more of an issue as well. Okay. So the issue then becomes, why is understanding the transition from single family to multifamily or multi-unit properties crucial for scaling a real estate portfolio? Why is it important to understand the basics as it pertains to single families before you get to the multifamily? I.e., is there an advantage to walk before you run? To put on training wheels before you run the marathon. Okay. Maybe that's a bad example. Before you run these live in England, so Tour de France. Okay. And so you want to put your training wheels before you get onto the Tour de France, or do you just jump onto the track and keep going? Okay, so why is understanding transition from single family crucial, in my opinion, before you scale? I know there are some gurus who say, don't worry about single family, just get straight to the multifamily. That's okay, but I think that it's worthwhile to get your feet wet in single families first, and then make some mistakes, if you're going to make mistakes, before you go on to the big leagues on multifamily and first. So the evolution from single family to multifamily marks really a significant milestone for a lot of people, okay, on your journey. So in this today, we're going to talk about the complexities and the rewards of this shift, from single family to multifamily, and and the benefits for you. So most people tend to start with single family, as I said before, but I think it's really key before you get too far to learn before you you make your mistakes on on properties whereby you don't have a huge investment or huge risk before you take on monumental, potentially catastrophic risk if something goes wrong. So number one, we're going to start the discussion today with single family investments. These are the basics. You probably know a lot of this stuff, but I think it's important to kind of summarize on this before we get into more deeper into the multifamily arena. So the question is, why start with single family homes, and how can they lay the groundwork for future scaling. So why should you start with single family as a groundwork, and and lay that groundwork for future scaling? Okay, so that's the question. And the response to that is single family homes are often the stepping stones for a lot of people. They offer more straightforward entry points. It's a lot less complicated. Most people are familiar with single family, investing. It's something that most people can grasp. Okay, it's not too complicated. The cost of entry is usually a little lower, so your initial investment cost relative to multifamily is cheaper. And in terms of management, it's usually simpler as well, especially when compared with multifamily. In terms of financing, it's easier to get financing on single family homes. There are lots of mortgage companies, there are a lot of loan brokers, and there's just more money available for single family homes. And typically, you require lower down payments. So if you don't have a whole lot of money, you can get into single family, especially if you're going to use it as your primary residence. And you can do strategies like house hacking and so forth. Okay. And also, it's a great way to understand the local market wherever you are. Okay. Investors can gain the insights, I think, by through single families to learn things like neighborhood characteristics, where your property is located. You can learn the dynamics of appreciation. You can sort of learn the basics of rentals, becoming a landlord, dealing with tenants, resolving tenant issues, collecting rent, maintenance. All that stuff you can really come to terms with on single families relatively easier. So, but there are challenges, as we all know, with single families, such as the big one is risk of income loss. With a single family, you just have one house, which means that if somebody leaves, you have no income. So that can be devastating, especially if you can't handle or manage or reduce turnovers because there's no income. And so one vacancy, especially if it's going to last 1, 2, 3, 4 months before the next tenant comes in, it means that you're 1, 2, 3, 4 months out of luck at a minimum. Okay, so tenancy vacancy is a major risk in the single family arena. But either, I said before, either way, you're going to learn things like maintenance. You're going to learn about interaction with tenants. You're also going to learn about the legal aspects of being a landlord in the jurisdiction where you purchase your property. So it does build the skill sets, the essential skill sets, in my opinion, that will give you the basis for handling larger, more complex properties. Okay, so that's the reason why I say you start off with single families, because you can get your feet wet, you can learn the basics, you can make sure this is for you, and you can make mistakes and not get totally wiped out, and so on. So what are the action items associated with this starting with single family investments? Number one action item is, if you want to do that, if you want to go into single families, obviously it's research the area where you're going to be, you're going to be investing, the neighborhoods, the city, the zip code, and so forth. What's the growth potential? And for your single family investment property, another action item that you can do is work with mortgage brokers, financial institutions, financial advisors to understand your financing options and the tax implications of single family investing. Okay. And then a third action item is be to network with local real estate investors wherever you are, to gain insights and learn from their experiences about how to do this the right way and profitably, such that you can get to where you need to go to a lot faster. So that's number one, which is all about getting the basics about single family. So let's get on to number two now. We're going to be now gone from the basics of single family. We're going to be transitioning to multi-unit investments. That's what we're going to talk about now. So the question becomes, what are the key strategies and considerations when transitioning from single family to multi-unit investments. So what are the key strategies and considerations if you are now transitioning from the single family arena to the multi-family, multi-unit arena? That's what we're going to cover now. Okay, so that's the question. So let's talk about some of these answers. So transitioning to multi-unit, multi-family properties, it can be a significant leap. That can amplify your income and your portfolio value. So you're going from 1 or 2s to maybe 4s and 10s and 12s and 16s and 20s. It's a significant increase, leap, I suppose. Multi-unit properties such as duplexes, apartment complexes, or small residential buildings, they offer the advantages. I'm talking about some of the benefits. Offer advantages of multiple revenue streams from a single investment. So one property you can generate multiple income streams for that one asset, whereas compared to single families, you just get one income stream per property. In multifamily, you can get multiple income streams from that one individual property. And so while multi-properties can yield higher rental returns, which they can, they also require more substantial capital investments. So it means that it requires more money, but the numbers are usually larger for multi-families compared to single family. And therefore, it can be more complicated, more complex in terms of the financing that's going to be required to pull these deals together. So it's really really important. In fact, it's really very important, really, to understand the different loan requirements that lenders have for funding multifamily financing. Typically, you're dealing with commercial lenders, especially if it's above 4 units. And so the interest rates are going to be slightly higher. You may not be able to get 30-year financing. You may have to get to commercial financing, which is typically 5 to 7 to 10-year fixed, amortized over 25 years or so. So that's how you're typically going to fund these commercial projects. And you're going to need a larger down payment, especially when compared to single families. Okay, so different loans, different requirements, higher interest, higher down payment is what you need to be looking at. Additionally, there's increased responsibilities of managing multiple tenants. Okay, you may have a building now with 4, 10, 20, 30 people, 30 tenants. So there's more responsibilities as it pertains to property management. So therefore, you need to understand the tenant laws. You can't pretend ignorance is bliss. No. That's not going to be your cop out. You're going to obviously need to handle and get the occupancy rates that you're looking for. And you're also going to deal with maintenance and repair issues that are very different compared to single families. So despite these challenges, though, the economies of scale, it's much better with multifamily. So you can have more efficient operation, and so you can do technically less work for more money, in theory, that is, anyway. And but maintenance cost per unit in multifamily is definitely lower than the maintenance cost per unit for a single family, because you just got more properties in one building, and compared to, so if you got 20 houses, if you got a 20-unit building, that's all located in one place compared to 20 different houses. So your per unit cost, relatively speaking, is cheaper and lower for multifamily, especially when compared with single family. So what are the action items associated with the transitioning to multifamily investments, if that's the way that you're interested in? What are some of the action items I would suggest that you consider? Let's have a look. I would say that you want to do a thorough market analysis. You need to understand the market that you're going to be entering. What's profitable in that market that you're in? What type of unit numbers? Is it 1 bedrooms, efficiencies, 2 bedrooms, 3 bedrooms, whatever it is? What's the most efficient ratio in terms of bedroom count that you want to consider? Another action item is educate yourself on the nuances of multi-family property management. Okay, it's different than compared to single family. There are some nuances. You got more tenants, you got more issues, especially if the tenants don't get along. If the tenants band together, that could give you problems. And one bad apple can spoil the whole bunch, as they say. If you get a bad tenant, they may drive out some of the good tenants. Build a support system, including things like legal advisors, property managers, and maintenance teams, because you're going to need that if you're going to enter this fray. Okay, so that's number 2, which is transitioning to multi-unit investments from single families. And then number 3, so before I get too far, as usual, if you got some questions, put them in the chat box, and I definitely answer them in about 5 or 10 minutes. Now we're going to go to the Q&A, Ask Dr. Joe. So if you got any questions pertaining to real estate investing, if you want to pick my brain, if you want to find out more about the event that's going on December the 16th between 11 and 1, if you want to find out, well, how in the world, Dr. Joe, can you cash flow in properties where you have to buy it for $500,000? Okay, how in the world can you cash flow in those scenarios? How do I deal with tenants? All that stuff. Pick my brain. We're going to start that Q&A session in about 5 or 10 minutes. So put your questions in the chat box, and I'll definitely get to them very, very shortly. So number 3. So what are some of the advanced strategies for scaling? So we talked about thinking about doing this. Now we're more involved with actually doing it, and some of the strategies for scaling your portfolio. So the key question here I'm going to throw out there is, how can seasoned investors like yourself effectively scale your portfolio with a mix of single family and multifamily? Okay, so I'm just saying that you started off with single family. Now you want to scale up. So how do you do that effectively if you have a portfolio of single and multifamily property? That's what we're going to talk about next. Okay, so hopefully this is a good session for you. Again, put some comments in, give me some feedback. Give me some thumbs up and any feedback on how I'm doing, and hopefully you are learning from today's session. So for seasoned investors, like you and I, the focus shifts to optimizing and expanding the portfolio through what I call strategic scaling, not just scaling for the sake of scaling, but strategically, surgically scaling. Okay, and how do you do that? Because this can involve activities across different types of properties, different locations. You may want to do a situation whereby you leverage assets in order to fund your growth. So one asset, you may sell a house or get a refinance on one property and use the proceeds to buy multiple properties. Okay, these are all advanced strategies, I think. And also exploring different types of financing, things like 1031 exchanges, things like syndications, and I'll talk about those in a second. These are more advanced strategies in order to finance and fund your deals that we're going to cover right now. So advanced financing options like 1031 exchanges, it really can offer significant tax benefits, because all you're doing is you're deferring the capital gains that you have when you sell an asset. You're deferring it, i.e. you're not paying it, you're just carrying it over to the next house or next property. So you're reinvesting the proceeds from a sale into a similar property, a like property. Okay, so that's what a lot of people do in order to save on capital gains, because hopefully you're making money from this transaction when you're selling, and Uncle Sam wants his portion. So savvy investors say, well, I don't mind paying taxes, but not right now. And so they do 1031 exchanges as a vehicle to defer paying the taxes for another day. Okay, so but you got to buy what we call like properties. And the second part of another advanced strategy is what we call syndication. And syndication, what does that mean? That's really just a way of pooling resources, okay, of other investors. So if you've got one investor, got multiple investors, they can pool their resources together and then use the pooled resources to purchase properties. Okay, that's what we mean by syndication. It's, obviously it's very complicated. You got to have agreements. You got to have legal counsel draft the documents. You have to make sure everybody knows what they're doing and everyone's aware of the risk and everybody knows what they are getting into. Okay, so it's more for sophisticated investors who can afford to absorb the risks and the losses should something go wrong. Okay, so if you have no money and you're struggling to pay your electric bill, then you may not want to do syndications because if something goes wrong, you may not be able to pay your electric bill. Okay, and then you have your lights cut off, which is not a good thing. Anyway, so that's what syndication is all about, and it allows you to buy bigger properties because you can pool resources, pool monies together. But there is a way, there's a person that's doing this, and you want to make sure that you are compliant with all the legal SEC and regulations, requirements. That way you don't fall foul of local, federal, and state laws. Okay. So, but either way, these strategies require a thorough understanding of real estate laws and financing nuances. Okay. It's not something a newbie just starts off with, it's something that you can work into. And so, building and managing a team becomes really, really important if you're trying to go and scale to larger projects. Because as your portfolio grows, the complexity grows. And therefore, you need to surround yourself with the right people with the right skill sets who understand how to do this the right way. So this team may include the people like property managers, real estate agents, financial advisors, and legal experts. Okay, so what are the action items so far in terms of sort of advanced strategies and considerations? First of all, you want to assess, your portfolio and make sure you have the adequate diversification across different types of real estate. You don't put all your eggs in one basket, as they say. Another action item is to explore advanced financing options. As we talked about, 1031 exchanges, syndications, and private investors, and so on. And you want to consult with financial experts and legal experts to understand the implications of what you're getting yourself into. And then finally, another action item is focus on building a reliable team. Again, team, that's coming up. You can't do this yourself. No man is an island. You need to surround yourself with the right people, the right skill sets, and the right expertise to manage and grow your portfolio effectively. Okay, so that's the action items there. And then let's wrap this thing up. So the question on the wrap up is, what are the key takeaways for investors aiming to scale from single family to multi-family? What are the key takeaways from today's live stream? It's now 7:31, so I'll wrap this up in a second. So what are the key takeaways for you and I if we want to scale from single family to multi-family units? Okay, so let's talk about that. What does that mean? Scaling the real estate portfolio from single family to multi-family is a journey, okay? And it requires patience. It requires continuous learning, and also requires a certain level of adaptability. Okay, and that's the first thing. So starting with a single family homes allows investors, you and I, to build a strong foundation in real estate. It allows us to understand the basics of property management, and also helps us to understand the market dynamics of where we decided to rent or where we decide to invest. Okay, so the transition to multi-unit properties, while challenging, it is not easy, as I said before. It opens up venues or avenues for increased revenue and also portfolio diversification. Okay, we don't put all our eggs in one basket. We have a diversification. If one house becomes, or one unit becomes empty, we still have multiple units in order to generate some income. However, it does demand more. I think this is it's important that I say this. It requires more capital, significantly more capital, in a deeper understanding of financing, and also I think it requires a bit more, a better understanding of property management. Okay, your management skills, I think, becomes more important in multi-family because you're just dealing with more people. You got more tenants that you're going to be managing, and so it's a human relations business. You're dealing with human beings, so your ability to manage and work with people becomes very, very important. So for seasoned investors, it's not just about adding properties, but it's really optimizing and diversifying your portfolio through advanced strategies, and also building what I call a competent team. So the journey from single family to multifamily exemplifies the evolution of an investor. Okay, your growth, and and also your ability to manage larger properties, and so on. So it requires advanced strategies, and again, building a competent team. So it's a testament to growth, both personal and financial, that the real estate investor can bring upon themselves by moving from single family to multifamily. So what are the action items before we wrap this up for the day? And things like reflect on your current investment strategy, reflect on where you are on your journey, and identify areas for growth and improvement where you are. Okay, where can you grow? Where can you improve? Are there places in your areas of interest where there are opportunities? Set realistic goals for scaling your portfolio and develop a step-by-step plan to achieve them. Have realistic goals. If you don't have anything, don't say by this time next year I'm going to have 200 units, because for the most part it can be done, but for the most part it's not realistic for somebody who doesn't have anything. Okay, and develop a step-by-step plan. Okay, so have the goals, have the plan, and how you're going to reach those goals, and engage with other investors who are successfully doing this. So hopefully you can learn from their experiences, and they can encourage you, they can support you on your journey. It can be a very lonely journey, but it's definitely a journey worth doing, and so on. So what I've done today, I'm going to wrap it up now, is I've given you, a thorough approach and giving some detailed insights with actionable items, actionable steps that you can take, that you can use as a roadmap to scale your real estate investments from where you are to ultimately where you're trying to go, from single family to multifamily. So that's what I try to do today. Hopefully it was helpful. It's now 7:36. So my friends, are going to go to Q&A. But before I go to that, again, as I do have another event, it's going to take place on December the 16th in Washington, D.C. at one of my students' properties in Washington. You've got to come. It's going to be a great session. You're going to see how this student was able to buy a house, and in the process of transforming it from a 4-bedroom, 2-bath into a 6-bedroom, 4-bath. Okay, he's going to rent it out to Section 8, and as a 4-bedroom, it does not cash flow. In fact, it's negative cash flow. As a 5-bedroom, it just about breaks even. As a 6-bedroom, you can make cash flow, and that's what we're trying to do. So you want to learn how you do that. That's what we're going to cover on December the 16th at the event. And this is a great time to learn all about rehabs, learn about my strategies, learn about Section 8, learn about BRRRR with a Section 8 twist, learn about rehab, what's the processes, what's the steps, what's the timeline, how do you develop a scope of work, how do you select a contractor, how do you manage change orders, how do you deal with challenges that occurred during the renovations with contractors. All that stuff we're going to cover during the session. It's going to be at a property at the site, so you have a chance to walk through the site, walk through the property, and see for yourself how somebody can take a 4-2 and turn it into a 6-4. There's going to be free food. There's going to be refreshments there. So bring your empty stomachs with you. You're going to network with like-minded people who are just like you, striving to reach financial independence. You can network, communicate, develop relationships, develop partnerships with people who understand. Who understand, and people who get it. And also, you can pick my brain, ask me all the questions you want during the session as well. It's going to be a great session. I'm looking forward to it. Hopefully, you can join me. To learn more about behind the scenes of a renovation project, December the 16th between 11 a.m. and 1 p.m. And you can register at www.joeasamoah.com, www.joeasamoah.com. There is a limited number of seats. So after a while, if it does get full up, we will stop signups. So hopefully I will see you in real time on December the 16th between 11 and 1 at the property in Washington, D.C. Don't forget to sign up and register at www.joeasamoah.com. And finally, if you've got any questions, feel free to shoot me an email. I'm at joe@joeasamoah.com, joe@joeasamoah.com. And at this point, my friends, we are going to go into the Q&A, Ask Dr. Joe session. So if you got some questions, please put them in the chat box, and I'll do my best to answer them. So let's have a look. What do we have here, my friends? Ashik Kaushik, do you have a mentorship program for folks looking to invest in Section 8? Yes, sir. If you're interested in doing Section 8 investing, I don't know where you're based, Ashik. I do have the JV Wealth Builders program. This is the program that my student is going to be, the session we're going to have on December the 16th. He's going to be, he's doing it. And the whole idea is to help people execute. It's not about giving you content. I think you can get content anywhere. At this point, I think the key is execution. And for most people, they're just busy. So the program is more designed to help you execute. I'm more immersed. I'm more involved, helping you find deals, get the financing, helping you through the renovations, and helping you navigate the whole bureaucracy of Section 8. That's what we're going to be doing as part of the JB Wealth Builders program. If you're interested, Ashik, please attend the session on December the 16th. And if that's not possible, then shoot me an email, joe@joeasamoah.com, joe@joeasamoah.com. I'll be more than happy to provide you more information. Good question. Greetings from Phoenix. Hey, Datu. Hope you're doing well, as usual. Wealth and Wellness with Grace. Hey, Grace. Hello. Hope you're doing fine as well. So do you have any group the DMV I can join? Yes, sir. Come with me. This is from Daniel. Come with me. Join me. Sorry. December the 16th, Daniel. You're going to enjoy it. It's going to be a great session. Sign up. Register at my website. There is a fee. It's $49, but I think it's going to be well worth it. You're going to have some great information. You're going to network with like-minded people. You're going to have free food. You're going to learn how to do this. You're going to be able to walk through a property in real time, and you're going to be able to interact with like-minded people and learn from my mistakes, the good, the bad, and the ugly, and how to implement this strategy that we have. So please join me, Daniel, December the 16th. You can go to my website, joeasamoah.com, www.joeasamoah.com to sign up, and I'll definitely see you there. Get Lobbyster. Hi, Dr. Joe. We learned that our market where we live in Texas doesn't cash flow. In this situation, what other ROI metrics should we consider focusing on instead? Okay, so you're saying that where you live in Texas, it doesn't cash flow. Well, it doesn't cash flow in most places because most places the prices are so high and rents haven't gone up as much to counter it. So the question becomes, what do? That's the question. It is what it is. There's nothing you can do about it. There's nothing I can do about it. But I face the same issue in the DC area it's hard to cash flow. And the only way I was able to cash flow was to get creative. And that's where I sort of got into the Section 8, because I can force cash flow by making improvements to the property. I don't know if that's practical where you are in Texas, but all I'm saying is that people are doing it. Okay, I don't buy this whole thing of, well, it's too expensive, therefore I can't do anything. Well, let me tell you one thing: 10 years from now, you'll be kicking yourself wishing that you bought today when it was cheap. So that's just the way it is. So I think the challenge for you is try how to figure it out to make it work where you are in Texas, given the reality of where the market are in. There are people out there who are doing it, in other words, and they're strictly under the radar. They're not blasting it out to the masses. They're just doing it. So you can do the same thing as well. Cash flow is a metric, obviously. You can do the Section 8, whereby hopefully you can minimize turnover, and hopefully that will make the numbers work better for you as well. So there are lots of real estate metrics that you can consider. I think it's cash on cash return, there's NOI, there's cash flow, there's return on equity, there's just a lot of them. In fact, there's a book just on real estate terms, and that you may want to consider as well. But anyway, somebody's doing it where you are, and I don't see why you can't do it as well. Michelle, hey Michelle, you're back in London, back to DC on the 27th. Okay, so I won't see you on the 16th. I hope you're doing well in London, and you'll be back in DC on the 27th. Oh my goodness, we saw a great house, Michelle, last Saturday. That it may work for you. I don't know, but it's in DC, and let us know if you're interested. Let me know if you're interested. If anyone's interested, there's a deal that I saw a house up in Washington on Saturday. The house needs a lot of work, but it's in a good area, and it's got. I think we can make 6 bedrooms, so we can cash flow. You're not going to make a lot of money in cash flow, but you're in a good area. And if we can negotiate a good discount, you'll be able to make at least $200,000 equity on day one and be able to cash flow. But you're going to need to leave some money in the house. And if you're interested, learn more about that, shoot me an email, and I'll be more than happy to connect you with the agent or give you more information and so on. So anyway, Michelle, look forward to seeing you when you're back in the US. On the 27th. Hope everything's okay in London, though. Sharito, CS. Hi, Dr. Joe. Thank you. Same to you. It looks like Sharito. Where's CS? I wonder what CS stands for. Maybe you can let me know. Again, if you got some questions, please post them in the chat box, and I'll definitely try to handle them, answer them during this session. Young Lord, if you had 3 properties in which 2 of them are co-ops, and you are looking to put them on Section 8, okay, how would you go about getting funds to make the changes to get the properties up to code? Okay, so let's read that again. If you had 3 properties, I got 3 properties in which 2 of them are co-ops. I'm not too sure. The co-ops, I think you have shares in the property. They're kind of funny. I don't have any co-ops, so I'm not really an expert in those. So I assume they're apartments. And so you got 2 apartments, you got 3 properties or 3 apartments, 3 properties in which 2 of them are co-ops. So 2 of the 3 are co-ops. Let's just assume that 2 of the 3 are apartments. And you're looking to do some Section 8 on this portfolio that you have. How do you go about doing it? First of all, you want to contact your local housing authority to find out how much they pay for where these properties are located. And based on the number of bedrooms that you have for these properties, you can make a pretty good estimate on whether you're going to be able to cash flow or not, especially if you've got debt on the property. There are legal requirements of properties if you decide to go with a Section 8 program, especially bedrooms. They have to have a certain size. You got to have windows. You got to have what we call egress. You got to have, a closet. You got to have there's a bunch of different requirements, ceiling height and things like that, in order to be considered a legal bedroom that comply to what they call HQS, housing quality standards. Okay, these are federal rules that you have to comply with. So there may be some costs that you're going to have to incur in order to get these properties up to par. Hopefully, you don't have to spend too much money. And so how would you go about getting the funds? That's a good question. You can get a rehab loan. You can, maybe approach a bank for financing. You may have a home equity line of credit already in place that you can leverage and tap into. So different ways to get money. I think the money's out there. It's just a matter of figuring out what it is that you're trying to do, and and packaging it in such a way that it makes sense for an investor or a lender to rent to you, or to lend to you. Sorry. I have 3 properties I'm looking to convert but need renovations. This is from Youngblood. I have 3 properties I'm looking to convert but need renovation. I'm not sure where you are, where you're located, young lord. If you're in the DC area, or if it's not too far for you to get to DC, you may want to attend the networking education event on December the 12th. One's on the ticker tape, behind the scenes of renovation, because you're going to learn about how we do rehabs, and you're going to be able to walk through a property, and you can ask all the rehab related questions that you have, and it's all going to be there. So that's December the 16th between 11 and 1. You can register for the event on www.joeasamoah.com, and there should be a ticket there, or a link there. Young Lord, have family members in there, so I don't get much rent in the traditional way, so I'm going the Section 8 route. Okay, that explains everything then. So you got family members in there, and you've decided to be, to give your family a break by charging them low rents, less than what market renters will pay. So if you want to cash flow, then you're going to need to get a higher rent. There's no so it sounds like, if it's family members, you either don't feel comfortable, or they've somehow convinced you not to increase the rent. That's okay. I mean, you're essentially running a non-profit organization, but you may be okay with that. If you're not okay with that, then the best thing to do is to ask them to leave. So that way you can get the place ready and rent it to somebody else and charge market rent. And that way you don't have that sort of family dynamics, the family issues that you're going to have to deal with if you want to, get rid of the tenants and put in Section 8 families. Okay, good questions. Get Lobster, thank you. Good. Michelle, let's talk. Well, yeah, you can give me a call as usual on WhatsApp, or you can shoot me an email, and then we can talk and so on. Great info as usual. Thank you, Vasa. You're welcome. Yeah, my single family, I can get $1,350 for it. It's a 2-bedroom in Detroit. Okay, so you got your single family. You can get $1,350 for a 2-bedroom in Detroit. Okay, I'm not too sure, but it's all good. Thanks for the info, young lord. Okay, you're welcome. Okay, so if you got some questions, I'm going to wrap it up in a second, that you'd like me to cover, please put it in the chat box. Otherwise, I'm going to get an early night. I'm tired. I wasn't feeling too well at the early beginning of the week, but I'm much better now. But again, if you can join us on Saturday, next Saturday, it's going to be a great session at one of my students' rehab projects. He's bought a 4-bedroom, 2-bathroom house. He's going to convert that into a 6-bedroom, 4-bath. And it's going to be an event at the property. So you're going to learn behind the scenes, behind the curtains for a renovation project, December the 16th between 11 and 1 p.m. You can sign up go to my website, www.joeasamoah.com, and you can register through a link there. I envision it's going to be a great session. We're going to have a good turnout. Going to be a lot of networking, a lot of education and learning is going to be there, and catered food. So bring your empty stomachs with you. I think you're going to enjoy that. And based on past experience, all the other events that I've done, this one's going to be a success. It's going to be exceeding people's expectations, and hopefully you will be there. It is a paid event, so there is a fee. It's $49, full disclosure. But my goal, whenever I do an event, if you pay $1, my goal is to make sure that you get $2 or $3 back. And in fact, my goal is to make you so guilty that you're going to want to give me a tip. How about that? So, Get Lobster. We are new to real estate investing, but what we have in our buy box is to start with a duplex. Good. But you seem to prefer single families be the entry point for newbies. Is something wrong with no? Is something wrong with that strategy? Not at all. No, you're fine. You're fine, Lobster. All I'm saying is that you have to start. The good thing about a duplex is that you can live in one part and rent the other, and so you can get homeowner financing, lower down payment, lower interest rates, and then you can live in one and house act the other. You can do that. So it's definitely, no, I'm not criticizing your strategy at all. I'm just saying that what I did, I started off with single families. And that's where I started. And that's why I sort of zeroed in on and focused on. But I'm not saying that's the only way. There are lots of other ways. Lots of people start with multifamily and they do very, very well. Some people start with duplexes and do very, very well. So I think there's no right way. I just wanted to share today with the pros and cons. And my thinking was that you start small, learn the basics, get comfortable, and then you make the move to the larger units and so on. So hopefully that was helpful. That's reassuring. Thank you. Yes, you're fine. You're doing good. The important thing is to take action. Otherwise, we could have this conversation a year from now, and you're still thinking about it. And and that's what we don't want. So, Roxanne Bilil, virtual class. Maybe. Please add more info. Clarify. Give me some ideas. I have no problem doing a virtual class, but I like meeting people. So if you're in the DC area, please come down and let's network, let's engage with each other, let's do business, let's learn from each other, let's network and try to get financial independence that way. Okay, my friends, it is just about 7:55, 7:66, and I'm just going to wrap it up for the day. And I will see you hopefully next Saturday at the event here in Washington, D.C. Please sign up on my website, www.joeasimo.com. It's all about behind the scenes of renovation. You can go visit one of my properties. Not my property, one of my students' properties. It's going to be December the 16th between 11 and 1. It's going to be a great session, networking, free food, education, learning, all the intricacies of renovations, rehabs, plus my big city BRRRR strategy with a Section 8 twist. Learn all about Section 8 as well. So, my friends, I hope I'll see you 11 o'clock between 11 and 1, December the 16th. Don't forget to register at www.joeasimo.com, and I will see you then. So have a good evening. I'll speak to you guys later. Take care. Bye for now.